Hello, everybody. Welcome to the Speaking of Insurance podcast. My name is Aaron Bollinger,
I'm Brian Bollinger.
and today we're going to be talking about why the average business owner and person in California are paying so much for insurance. Why do you think they are?
Well, California's expensive, right? I mean, everybody lives here knows that it's not the cheapest place in the world to live, but we do choose to live here. So obviously, I don't want to go into politics and why things are the way they are here in this state. However, let's start with the basics. Insurance companies don't pay insurance claims, my clients do. And what I mean by that is every time you see an automobile attorney sign for accidents on the side of the freeway, I tell my clients, take $100 out of your wallet and throw it out the window, because that's what it's costing you. The amount of auto liability claims in California, and really across the country, have skyrocketed in the last 5 to 10 years. And as those jury verdicts increase, as the percentage of claims that are litigated increases, and just as the average payout per claim increases for a number of other factors, insurance rates have nowhere to go but up. And so we call that claims inflation, and it's happening significantly on the auto insurance side. When we flip over to the property insurance side, one of the biggest drivers we have in California is that our homes here are getting older. So we have a lot of structures that were built in the 50s, which doesn't sound that long ago for some of us. For the younger people, maybe that sounds ancient. But in reality, these structures are approaching near end of life when it comes to functional use. And so there's some inherent possible defects in these older homes and older structures that haven't been updated properly over the last decades. And eventually what that leads to is increased numbers of claims. So that's one of the factors that influencing these claims. I'd say the bigger factor right now that we have is the fire insurance aspect. And for that has to do with the amount of large fires we have in California, our brush clearing practices, our construction practices. The fact too that probably we still build with wood, right? I mean, building with wood in a fire zone area, if you ask some people, sounds kind of crazy. But that's what we do. And so we're seeing an increased number of fires. Maybe that's what they say, but we don't know that for a fact. But we do certainly know that we're seeing a lot more homes get destroyed. I mean, ever since the Palisades fire, now the fires in Los Angeles, the number of homes that we're seeing burnt in some of these significant extreme fire events are astronomical. And as you calculate that back out to the cost per home that's destroyed, say the average home might be $1 million to replace, and maybe it's $500,000 or $250,000. We can argue about the numbers. I'm just making the math easy here. If you say $1 million per home, like for the Palisades fire, I'm definitely underestimating that number. But when you say you have 1,000 homes, 1,000 times $1 million, that's $1 billion, just right in that one kind of simple example. And some of those homes are significantly more expensive than that. And that's just accounting for homes that were destroyed. You also have to realize that a true homeowner's policy covers you for smoke damage in a lot of situations. And so you have homes that weren't fully destroyed but can't be lived in. And so there's also additional living expenses, a number of other factors that build into it. So when you try to think about why we're paying so much for insurance, it's not really a one-size-fits-all, but I do think fundamentally it boils down to insurance companies collect premiums today to pay for the claims tomorrow. And when the claims tomorrow are projected to be larger than they were yesterday, there's nowhere to go but for the claims to go up. And as that happens, we're going to have, ever increasing prices.
Yeah, I mean, I've got the numbers in front of me, right? So according to Experian data, this is just the automobile side, right? This is not bearing in mind the Palisades fire, right? And the property side. This is just the average auto insurance with full coverage. It's said to cost $3,029. $3,029 for the average Californian's auto insurance, which is obviously an astounding number, given probably the average income and all the things like that. This number is drastically inflated. Why do you think that we're seeing this on the auto side?
Well, ever since the COVID shutdown, right? I mean, obviously insurance companies made a ton of money on auto insurance then because we really weren't driving. So, they gave us the $20 back or a couple $100 back, depending on the insurance company we're with. But when we returned back from that, there were a lot of people that were driving faster, right? We kind of got an experience from driving. But I say a bigger portion of what we saw was to increase cost to repair these vehicles that we're driving today. I mean, I used to drive a 65 Ford Mustang. It had a steel chrome bumper. Back in the day, it was like a $50 bumper. It's probably $300 to $400 now to replace it. It took 4 bolts in 15 minutes, okay? The automobiles of today, even like 20 years ago, they'd have like basically a body-colored painted bumper on them, and that'd be $1,000 or $2,000 to replace. What we're seeing now is all the electronics and sensors in vehicles, that same bumper to replace now can be $5,000 or more. And so we're seeing an increased cost per even small incidents in terms of fender benders. They're costing more to repair. And then the second part of that factor is, of course, the claims on personal injury and bodily injury, and some of those claims being litigated more, and also some of the jury verdicts, and settlements being 10x, 5 to 10x what they were before. That all puts pressure on the average rate to go up. And again, I remember back when I first started 20-something years ago in insurance, it wasn't uncommon to see people with auto insurance premiums for full coverage in the $500, $800 range. And even on a commercial vehicle, like a big work truck, it being $1,500 to $1,200. And so, now we're seeing those numbers, like you say, in the $3,000 plus. Probably another portion, though, of things that we have to think about as, middle income and above people in California is that auto insurance is incredibly unaffordable for a lot of working families in California. And so what they're doing is they're going without liability insurance, or they're going with state minimums of liability insurance. And on some states, of course, there's not no fault coverage, so we won't go into that. But just talking about California, explicitly here, it means that if somebody gets in an accident or somebody hits you, it's highly likely they won't have enough insurance to cover you in the event of a claim. And so what that means is you have to have uninsured motorist and underinsured motorist to protect you. Essentially, you're buying insurance now for other people on the road. It's not fair, but it's the only way we can help protect working, middle income people and above families in California, so that they know that if somebody hits them and hurts them or their family, that there's going to be some level of insurance on the other side there to help pay for their medical bills and hopefully pain and suffering should that be necessary.
Yeah. I mean, obviously, we know a new precedent in California has been set, right? Not just with the rate hikes in terms of the homes, which is obviously for the companies to be able to afford the losses and things like that, and to get some of that money back in return, but also on the auto side, right? We saw a recent increase in the minimum limits, right? To 30, 60, 15, 30,000 per person, 60,000 per accident, bodily injury, and $15,000 per property damage, right? For property damage. So obviously, what does this imply for future pricing, right? I mean, of course, we would recommend these coverages be way higher, right? And into the 300,000s and whatnot, given the litigation. But if this is the precedent that California is setting and they're requiring the more insurance, the higher insurance coverages, what does this say about how these litigations are impacting prices for these people?
Yeah, again, at the lower end, I don't think it's the litigation that's driving the cost structure as much. I do think, though, it's the increased cost for the actual property damage on the vehicles. Again, nobody asked me what I felt like a proper level of insurance should be for a state minimum, but it would certainly be significantly higher than 30, 60. I mean, even 50, 100 sounds low to me. There was a time not that long ago when leased vehicles were at 100, 300, 100. It means $100,000 per person, bodily injury in an accident, $300,000 per accident of bodily, liability, bodily injury, and then $100,000 of property damage. To me, that still seems like the lowest amount of coverage that one should really think about considering. As you know, son, we do deal with people who need umbrella policies, excess liability policies, and so we need to, think about that too.
Yeah, and then obviously for the middle and higher income individuals, it's really important also to make sure that those coverages meet those requirements for umbrella insurances, right? For the personal umbrella insurances. So those minimums, obviously, those won't be covered by an umbrella, but the people who are, again, higher income and have more liability and more risks when they're driving and, want to be more protected, then we have to take into consideration the minimum requirements being $250,000 and $500,000. Right? And so those coverages and making sure that you have that conversation with your broker if you feel like you aren't being properly covered, or, I mean, you never know if you're properly covered, right? That's why an umbrella tends to help.
Yeah, I mean, the truth with insurance, and this is what I've always told my clients, is when you need it, you can never have enough insurance. The problem is the rest of the time it's a waste of money. And so I actually talked to an attorney not that long ago, a year or two ago, and he actually added something to that. He says that he tells his clients, may insurance be your best waste of money. And what he meant by that was, again, if you have, wasting money on insurance is fine because it means you have it if you need it. And if you need it, of course, then it's not a waste. It was actually an investment, or it was a, peace of mind. And so it's important that people realize that that's a better way of looking at insurance. Is you're partnering with an insurance company in part, you're trusting them to be there when you need them. And then also you want to make sure you have enough insurance to cover you for, some pretty bad outcomes. And if you have personal assets, those can be on the line in an auto insurance claim, whether you're a business or an individual. It's important that you realize that every time somebody uses your car, every time an employee goes out on an errand or drives your work truck, or even every time your 16-year-old kid drives down the street in your family vehicle, that they're taking with them all of your personal assets with them. I mean, it's kind of a scary thought, but and business assets with them. And so having a couple $1 million of liability insurance, that really helps soften the blow in the event that something goes wrong.
Yeah, I can speak from experience, right? I mean, like we've seen people who have, had those claims, like myself, right? Obviously, I mean, I had an auto insurance claim. It was a non-injury, so it was just damage to the car. But had it been damage to actual person, those claims can be super, super expensive, right? And like unreasonably expensive. And having that personal umbrella would have, in the case of that, hopefully covered us and protected us in that instance. But I mean, going back to those prices, right? These prices that these people are paying, it's absolutely, again, obscene, the amount of prices that we're seeing, the increases for insurance. And so we'd like to talk about some ways to optimize your insurance costs, right? So covering individual and business sides. So the first thing we'd like to do is encourage you to talk to your broker about shopping around and comparing rates, right? So for the upper income individuals who do have those houses in those more higher brush areas, or for even the middle and lower people who have those properties that are more at risk for these things, we see these premiums doubling with some companies, but only going up. I say it only going up, but only going up 25%. Right, so some companies, right, we've seen some companies, put rate hikes in one area, in another area they're lowering their rates, right? We've seen Mercury take up more business in California in terms of the property and the auto side, right? These specific markets, and understanding these markets and having a broker that understands these markets is very important, because premiums do vary widely by insurer and location.
Yeah, and again, the biggest thing I say for the average homeowner, or I say actually, you can't move your location of your house, but you can take a look at the coverages. Insurance to me though is not just about price; it's about getting the right coverages you need. And with a home, the construction costs in California continue to soar. I mean, looking at the Palisades fire, which maybe you and I will go do a walkthrough over in the area just to kind of get a feel for how devastated that area is, and share that with people, how difficult that situation is for a lot of individuals that experience their losses, or Altadena, or wherever we want to go, right, where there's been horrific claims. In some country states it's tornadoes and hurricanes. It just depends. But getting back to this, the biggest thing on the auto side that you can do is to make sure that you keep your driving record clean and that you drive defensively. I mean, if you start having accidents or tickets or anything like that, there's nowhere to go but up in terms of the pricing. So one of the things we try to encourage every client to realize is zero claims is the goal. It's not the goal is not to have any claims, because as soon as you have a claim, even a small water leak or something like that in your sink that you turn in for an insurance claim and get a couple grand off of, the insurance companies see that, and honestly, in a lot of cases, that can preclude you from getting coverage in the future. And so sometimes you end up actually paying more for insurance than you collected on the claim.
Yeah. I mean, it's it's a double-edged sword, right? I mean, you either pay too much or you pay too little, but I'd be rather, paying too much for something that's good and benefits me. And then, if I have it, I need it, right? And so, but one of those things that, you might not need is, let's say that you have a car that's old and lower value, right? That you don't really drive that often. If you currently have that on your auto insurance policy, what can we do to lower those costs on that vehicle that's not really being used? Is there any way that we can optimize the comp collision or things like that?
Well, that's an interesting point, right? I mean, a lot of people lease vehicles, or they have, a lien holder on the vehicle. And in those situations, the lien holder or the leasing company, they require to be, named additional insured on your policy and be paid in the event the car gets damaged. But there is this term in a rising trend called self-insurance in California. And, in some cases, like with auto insurance, if you have an older car and it's worth a few $1,000, a couple $1,000, and, one of your kids are driving it, we did this for you, of course. You just self-insure. You essentially say, look, if this car gets damaged, destroyed, or stolen, we'll eat the couple grand, or, you'll have to walk to school. And, a lot of people can do that. I think the bigger concern I have with the self-insurance aspect of it is, people that can do it and they have the means, by all means do it. I think the challenge that I'm seeing is we're seeing an increased number of people who own their homes outright, elderly people in fire-prone areas, being forced because they can't afford the FAIR plan to essentially go without coverage, go bare. And if there is a fire that rips through there, that's going to be really hard for those people to recover. It's unlikely they're going to be able to get, handouts or enough money to get their lives back together. So that's my biggest fear, is that the people that are self-insuring, some of them shouldn't be doing it.
Yeah, again, having that knowledge of when to do something, when not to do something, that again comes largely from a broker, right? An insurance broker who knows A, the client, and B, the situation, and C, the companies and the coverages and the exposures and the risks, right? It's the job as the professional to help guide these people. And of course, you can't get 100% of them right, but you can try and do your best to explain the situation, which is, I feel like, hopefully what we're doing right now.
Yeah, the big key here is education. Be aware, if you choose to self-insure, make sure you're aware of what you're self-insuring for. Understand your maximum risk liability situation. Personally, for most people, I would recommend they not cut any corners on the liability side, be that auto, be that their homeowner's policy, be that the personal umbrella policies. That's where I think, that's the sort of stuff that I think really you need to spend the money and invest the time and money in. If you're a business owner having things like employment practice liability insurance, that's a really big thing to keep maintaining. But yeah, you need to talk to an experienced agent and or broker about your specific situation. Get educated, get informed, make sure you know what you're buying and why.
Yeah, I think we've touched on the personal side in terms of optimizing and whatnot. I'd like to go now transition over to the liability side for the businesses and whatnot. So for those who have higher deductibles, what can we think about and talk about as brokers with the client in terms of making sure that they're able to bear the deductible in an event of a loss, right? So how do you balance that in terms of how much cash you have on hand, how much you're able to pay for the event of a claim, right? Things like that.
Yeah, it's always hard to talk to individual clients about how much money they have on hand, and it all depends, right? Some people have peak seasons, they have peak cycles in the economy. We typically try to show people what the difference cost is wise for low deductible, medium deductible, high deductible. A lot of times it's just not significant enough savings to even stress out about having those conversations. But again, some things like earthquake insurance, that may not be the case. Maybe it is a question of going without coverage or buying coverage. And so you really have to dig into your specific situation and make sure you understand what you need and what your exposures are.
Yeah, and again, these prices and whatnot as well are we understand the increasing of a deductible, right? We understand the thought process behind it, right? We're able to save money in the short term, but again, if you're not able to bear that deductible in the event of a loss, you will be responsible to pay for that. And so I'd like to touch on some other ways that we can lower the cost. So we've seen recently a lot of insurers, especially on the commercial auto and personal auto side, open up some discounts. So there's like AAA discounts, Costco discounts, things like that for personal auto insurance. So if you do have a broker in California, please feel free to reach out to them and ask them, hey, do we have the ability to get any of these discounts? Because we've seen premiums drop hundreds of dollars just by, inputting a new thing into the quote, into the renewing policy, into the existing policy, right? Just because you're a member of something or you have a specific occupation. So please feel free to reach out to your insurance broker about that. Another thing is the insurers on the commercial side who do have fleets of cars. Those people also, they incentivize safe driving programs, right? And property maintenance and things like that. These sort of discounts they offer. Have you seen any success from, potential clients or existing clients in terms of saving them money from having property maintenance or safe driving programs?
Well, let's talk about driving first. I mean, the problem with driving is when you have a client that doesn't have any auto claims, you can't ever, prove that it was because of the processes and procedures that we help them put in place. It's because you can't hear the dog that doesn't bark. So, that's kind of the first thing. Now, getting into specifics, the best thing you can do as a business owner is really explore who's driving your cars or vehicles or trucks, why they're driving it, and when they're driving them. And what I mean by that is, a lot of times in the past, people would just want to be nice to their employees and give them company vehicles to take home. And it was a great, fringe benefit to have. The problem was it exposed your business to infinite levels of liability just to save that employee a couple $100. So my recommendation when I go to clients is I say, hey, let's look at every vehicle you have. Do you have to have them? And then you look at the driver's list. You say, do these people need to drive? I mean, I recently had a client. I mean, you've heard the story, son, about a one of our good clients. They had a key man that was driving a vehicle, and little fender bender. Getting merging on a freeway. The person had let him in. Was a quarter panel kind of thing. Maybe 10 grand worth of bumper repair, 5 grand, something like that. And now they're trying to go after them for hundreds of thousands of dollars in medical bills. And some of it they're treating as if like the vehicle rolled over on the freeway. So of course it's an attorney involved, and they're trying to get the maximum amount they can for their client. But again, you got to be make every employee realize that every time they take that vehicle out, that you're on the hook. So and that's a privilege, and they have a responsibility to drive safely. We do see some improvement if they have cameras and things like that in the vehicle. We seem to have a little bit better safety record. The problem with that is, one claim and then all of a sudden it doesn't matter. So we just have to realize that, it's really that culture thing, that safety culture. Ties back into things like workers' comp, that zero claim mentality. It's really important that you stress to your employees that, hey, we want you to be able to go home and have, Sunday dinner with your family and not be, laid up in the hospital or, God forbid, killed because you weren't safe or you didn't drive safely or some other thing. We want you to be able to enjoy your life.
Yeah, yeah. As a business owner, making sure that you do put your employees first and their safety first as well, right? And so if somebody doesn't seem like or doesn't have the best record, which you should be screening for before you hire people to be drivers for you, right? Then I mean, obviously you have to make these decisions, and fleet management and things like that also come to mind when we talk about these sort of strategies to mitigate, whether it be cost, optimize coverage, or make sure that you're in the appetite of a good company if a broker is shopping you around.
Yeah, it's hard. I mean, and the reality is the rates have doubled and tripled in the last couple of years. No clients happy, no agents happy, no brokers happy. I mean, we do really want them to, have a good experience. But I do think, again, go back to that statement earlier in the show. My clients are the ones that pay the claims, not the insurance companies. And what I mean explicitly by that is nationwide, the loss ratio on auto insurance has been over 100%, which means for every dollar of premium brought in, more than $1 in claims has gone out the door and overhead has gone out the door. And it means they're losing money. And so when companies lose money, there's nowhere to go but up in terms of pricing. And there are segments of this, market that have, auto exposures, some of which are, profitable. And so those rates might be cycling down or being flat. But then there's things like contractors and heavier trucks and things like that, trucking, that are on an upswing in terms of claim severity and claim frequency. And they're seeing huge increases in terms of premiums. And it's becoming, actually we had that one client the other day. They had a $50,000, $60,000 claim a year ago, 9 months ago, and they got non-renewed by their insurance company. And they had a 5x increase on their auto premiums, and nobody wanted to insure them. So, I mean, it just depends on your unique risk characteristics. You do have to realize that if you have a good deal, and you have a zero claim situation, maintain that. That's what keeps that affordable. As soon as you start having claims, there's nowhere to go but up in terms of your pricing.
Yeah. Speaking of change, right, and businesses, whether that be contractors in the growing industry, I think that if your insurance isn't growing with your business, right? So if your sales are increasing and your liability is increasing, or if your amount of cars that you're driving is increasing, and these assets of yours are appreciating and again increasing, then your insurance needs to be following suit. It's really important that we emphasize that these people, if you're doing really well, right, and you have a company, or you're a contractor, and you're putting your foot on the gas and you're going up, right? I mean, it's important to make sure that you stay on that uphill trajectory. And the way to do that is to have a good foundation below you with your insurance. And so having that conversation with your brokers, seeing what coverages we could increase, making sure that you are covered. So then, if things are going well for you, which I mean, obviously, so some it may not be, but to those who are, it is very important to also have your insurance, be rising. And of course the cost might rise as well, but that's a byproduct of your success, right? So your success is making it so, you're harder to cover and more expensive to cover.
Yeah, but again, I think the way a business owner looks at that, they look at it as a percentage of operating income. So if your sales go up and double, the premium won't double, but it's going to go up significantly. And so just realizing that that's kind of what I think what you're trying to say. The other aspect, though, is really talking about optimization. How to optimize the coverages for your business, for your unique exposures, and your operational structure, making sure that your operational structure is optimized, again, for safety and zero claim mentality, and making sure that you're not taking on more liability and things like contracts that are necessary. There's a number of things we can do to help kind of make sure and check out, what you're doing and see if there's a way to help you improve.
Yeah, yeah, I agree. Right, that's our job as brokers is to be there for everybody and to put information out, and hopefully people take it and internalize it, and whether we're their broker or not, right? If we're directly servicing them or not, if we're able to through this podcast communicate to them the importance of increasing your coverages and optimizing.
Yeah, the time to have your coverages reviewed is not after a claim, right? We can't go back in time. Nobody has a time machine. So it's really important that somebody talk to you, check out your insurance coverage program, make sure it makes sense for your business operations. And again, in some cases, you won't buy things like EPLI insurance in certain states, but you do need to be aware of the risk that you're taking on. States like California, we highly, highly recommend it, just because we've seen it actually be positive for most of our business owners. Having the proper insurance means that if you have a claim, you can essentially hand over that claim to the insurance company and they'll deal with it. You get to keep operating your business, you get to keep moving on with your life. You don't have to stop and try to figure out, where you're going to stay tonight. You have loss of use. You can go to a hotel. They'll reimburse you. Again, this is why proper insurance is so critical, and why, after a claim, it's too late to try to help people. But making sure they're aware of what their rights are before, make sure that they're aware of how they can optimize their program, today and not tomorrow.
Yeah, proactivity. That's all insurance is, and most of these businesses is just being proactive, right? Not waiting for things to come to you, preparing yourself for the bad events, right? And that's what insurance job is. And so again, checking your current policies, your coverage types, limits, deductibles, premium trend year to year, seeing if some unreasonable things are happening, right? We've seen some workers' compensation companies, right? They at the following year at renewal, after giving some good, scheduled credits, their pricing is going up double or triple because they're removing that credit. And having a broker that'll give you those alternative quotes, that'll walk you through the process, talk you through what's happening, and get you to either a better company, or B, hopefully it's together a lifelong or a long-term partner in terms of an insurance company, and keeping that coverage consistent, or consistent with your business's growth or decline, making sure that those things are factored into your business calculus is a very important thing.
Yeah, the insurance needs to scale with your operations. You go up, it needs to go up. You go down, it needs to go down. A lot of times brokers and agents can help you adjust the premiums accordingly. Sometimes they can do it midterm for you and get you a little discount if you're growing on your renewal, or even midterm policy changes get discounts. So again, it's important for people to communicate with their agents and brokers about what's happening in their business, what their needs are, but also what their fears are, right? I mean, it's too late once you've had a claim or an event has occurred that could become a claim, like to buy things like employment practice liability insurance. Needs to be bought yesterday, last year, 5 years ago, right? It's a pay-as-you-go insurance. So you need to really talk to people about your business risks and understand, what the pros and cons are. I think of insurance kind of like a sheet of armor, right? A plate of armor. You wear it, it takes out quite a bit of the things that come at you. The challenge with it is there are holes. It doesn't cover your whole body, and so you can still get shot. And so just be aware of that. And a good agent and broker can help explain to you what the pros and cons are, what some of the exclusions are, and what some of the current concerns they have explicitly for your business, uniquely for your business, based on your operations.
And again, insurance isn't like you say, it is a plate of armor, and it does have holes in it, right? And it's not a plate of armor that you can throw around as you please, right? This plate of armor, it gets thinner and thinner, right? It's like somebody's patience with you and when you're upsetting them or something like that, right? I mean, you've got to be consistent with it, because if you are a good driver, an existing good driver, and then you start driving very recklessly, or you're driving 5 times the amount of miles that you put on your estimated mileage, these companies, in order to actually have a company that trusts you and can give you good pricing and give you good coverage, and it's about the relationship with them, right? Making sure that you're fully honest honest about your history, your driving exposure, your mileage even. I mean, we've seen these companies that come back at the end of the year and say, hold on, you had told us that you're going to drive 4,000, 5,000 miles on this one vehicle. Why are you driving 12, right? And then that relationship there and that additional premium that at the renewal that, it does come back and haunt people some of the time. But again, reviewing annually these things, making sure vehicle changes, right? So if you're a commercial, owner, right? If you own a business, right? How do I know whether or not to, add a policy or a car to my existing commercial auto policy? Is there a way for me to figure out, like, if I'm driving it to work, right? But I own it myself and it's not in the business, should that be in my commercial auto policy, or how should I have that covered?
Yeah, I think the biggest thing you can do is consult with your agent or broker about these kinds of questions. Again, every person's situation is unique. Even different companies have different underwriting guidelines. Talking about commercial insurance, one of the things that happens there, personal auto insurance is based typically on miles driven per year. Commercial auto insurance is based on the radius of operation. Now, if that means one time a year you go to Texas from California, it's probably not your radius of operation. But if you go once a month or once a week, then that does raise a question that needs to be explored with the agent, and the agent needs to explore it with the insurance company's underwriter and make sure they have it properly coded. God forbid you get into an accident and you didn't disclose exactly what you're using your vehicle for. It can become a problem for you and for the agent and broker and the insurance company, right? Totally avoidable with good communication and, again, reviewing your unique situation.
I agree, yeah. So we all know California has increasing pressure from like the higher claims, the wildfire and property risks, the dense traffic, the expensive auto repairs. All of these things we know are factors that increase your business's premium or your personal premium. And obviously, if we were able to help, add any tidbits of information today in terms of, what you might not need to have covered or what you definitely should have covered, that optimize your coverage and make you not only safer, but, maybe put a little bit more money in your wallet, or in the long term, keep some money in your wallet from coming out of it, right? Then obviously being transparent about everything is a very key factor in that we've talked about, right? Like the driving record, the age, the vehicle, location, right? All of these things that do impact the cost.
Yeah, and even things like the home, like if you were to buy a home, how old is the home? How close to brush is it, right? These are things like I just found out an issue yesterday. Somebody's in a floodplain, We didn't necessarily know they were in a floodplain at the time. We had a hunch. But, we were hoping the lender would waive it because the National Flood Insurance Program is currently closed with the government shutdown, which, again, there's always some unique situation in insurance that we have to deal with. And the market's constantly evolving and changing. So having a good insurance broker or agent team helping you, reviewing your situation, I think it's critical. And they'll give you insights and coverages and things you might want to consider that maybe you haven't thought of. Again, it's not a simple one size, fits all situation. Everybody has unique needs, everybody has unique concerns, and also everybody has unique risk appetite. And you can't insure for every possible outcome. You have to pick and choose. Like even things like earthquake insurance. A lot of people don't have earthquake insurance in California. Most people don't have flood insurance in California. And in some cases, that can be a problem. So looking at your unique situation, your unique need, this is how you can optimize your insurance program.
Yep. Again, and having those conversations with your broker. A few questions that you could ask them are, what are my underlying liability limits, right? Do I qualify for an umbrella just from the personal side, right? Could I raise my deductible and save premium? What does this imply for me if I were to have a claim, right? How much money would I have to have on hand? What discounts am I eligible for that I currently don't have, right? You can ask yourself that question. Ask your broker what the eligible things are with your company that you're currently with, right? And then if you're a business owner, what's changed this year in my assets and operations, right? Making sure that you have all these things noted down.
Yeah, and the biggest thing I don't like about insurance really is this focus on price, right? Price is what you pay, value is what you get. And when you think about it, naming your own price, I tell clients that, want to talk price, I'm like, go and self-insure. The price, the premium for that is zero. Now the price, if your house burns down, could be millions of dollars. So, that's the side effect of that. again, we can come up with solutions that are available in the marketplace. We can scour. We work with a number of major insurance companies at Bollinger.com. We've got access through the ISU Steadfast Network. It's an international conglomerate of insurance agencies around the globe, and we have access to most of the insurance options in the marketplace. The challenge really is understanding your unique needs, your unique situation, and then giving you unique options that best provide a value for you, your family, and your business.
Yep, and so whether that's in a phone call or an email or contacting us directly in any sort of way, leaving a comment in the description of this video, right? We are more than responsive in terms of ways to help anybody. We don't have to be your insurance brokers to understand your situation and to sympathize with you, right? I mean, we understand, especially in California, not exclusively in California, but especially in California, these prices are getting a little bit unrealistic and very unreasonable. It's the new inflation, right? I mean, the amount of premium and rate increases that we've been seeing. But like you had said, it's the price you pay for good coverage that matters most. And again, I mean, reaching out to us, we'd be able to offer any bits of information or any helpful advice. We're more than willing to provide information to business owners, people who have personal insurance questions, just helping out.
Yep, that's it. So thank you so much for your time. We hope you've learned something today. And if you have some questions, leave comments, please share them. If you have ideas of future episodes or discussion points you'd like us to share, please leave the comments and we'll try to respond as quickly as we can. Thank you so much for your time.
Yep, thank you guys so much. Thank you for your time, Brian.
Okay, thanks, Aaron. Take care. Bye-bye.
All right, bye.